Let's get Sanjay Dutt of Quantum Securities into our discussion and find out what his view is on all of the things that have transpired so far. Hi Sanjay, good morning. Well, crude has rallied. Would that be a big issue now, or are you not worried at all?
No, I think these concerns would start bothering the markets right now, because markets are fully valued at this point of time in the short term. And obviously crude is a major issue for India. But I don't think crude prices are going to really surge beyond a level of what we've seen earlier, those 112, 113. So I don't think it's that much of a scare to live with. But of course, if it goes out of hand, we cross the 120 barrier, or we cross the 117, 118 barrier and start trading above that, it'll be a problem.
All right. Well, can the market have a pre-budget rally from here on, since you did say that the market is fully valued?
See, as far as the Nifty and the Sensex is concerned, I don't think so that there would be there's a chance of a big surge of 4 to 5%. But I think the underlying action that's there in the broader market, that will carry on, because investors, smart investors, fund managers, everyone is looking for better ideas to invest in across sectors. Particularly, companies which were earlier in the sub $100 million category, but now have surged a little, so therefore they come into the institutional radar and they fit into portfolios. So I think those are the companies where investments will move in, and there one can expect the action to continue. But to expect the Nifty to go up to 8,000 and break 8,000, I think a little bit of a tough call.
So now that you say mid-cap outperformance will continue, what kind of stocks will you buy?
I think across sectors, bottom up primarily, companies which have been under stress in terms of balance sheet problems, in terms of order flows, in terms of cash flows from government contracts and those kind of issues. They are the companies which will gain the most at this point of time, and more so companies which are going to be dependent on fresh money raising. So as soon as fresh money raising begins, they start deleveraging balance sheets, particularly in the second tier and third tier companies. Those are the companies I think which will benefit the most. Of course, the earning cycle will also start to improve slowly, but I think the first impact of deleveraging balance sheets, sorting out problems, that is going to be what's going to be the 2x, 3x effect on the mid caps and small caps.
Give us some names, yeah, Sanjay.
I don't really have some specific names to give, because there's so many of them. But I do find a lot of exciting stories even now amongst the second and third tier banks. There are public sector banks with relatively clean books, which are trading at a sub $1 billion valuation and somewhere around still 1.5 times book. I think the story is still intact, and there is a chance of the stocks doubling and tripling in the next few years. Stocks like Vijaya Bank, where we are just looking at initiating coverage, and we're looking at that bank. We met the management and we feel positive about it. Obviously, I'm not invested in it as yet, but there are stories like that, and similarly other stories across sectors, banking, infra, capital goods. You'll find lots of attractive ideas which are worth investing in, and that's where one should be looking at this point of time.
Okay, so PSU versus private banks, what's going to make more money?
I think PSU performance, outperformance would be there, because the most important issue that PSUs are going to now sort out and the times to come, as the government takes charge of the problems that are plaguing the core sector industries and the NPAs that are there because of various infrastructure industries, etc. PSUs will be the biggest beneficiaries, because there's a large amount of lending there. A lot of NPAs will get sorted out. A lot of restructured assets would start getting sorted out slowly. I think that's the play, much better play compared to the private sector banks.
Okay. What about oil stocks like BPCL, ONGC? Are they still going to make money for investors, or are they just running ahead of themselves now?
I don't think they're running ahead of themselves. I've been saying this for last many months, that PSU oil space is the space to be in. Yes, of course, you got to time your entry. You got to look at retracement and negative days to buy them. But I think there's tremendous amount of potential in them, whether it's IOC, HPCL, BPCL. They are grossly undervalued assets. And given the governance and given the focus and the confidence that I have in the current government led by Mr. Narendra Modi, I think there is going to be a very aggressive solution finding for these oil PSUs. And of course, everyone's gone, and it sounds so cliched that if the Gujarat PSU model is the model that's going to be replicated, I think there's no reason why all other PSUs, which are good PSUs, will not be, making money and will be sorted out in the near future. So I'm not saying that, the Gujarat PSU model is going to be replicated everywhere, but the fact is that as soon as good governance, subsidy issues, those kind of issues are solved, I think the oil PSUs will be the biggest gainers.
In that case, Sanjay, what is the biggest risk for this market? And what, according to you, would be a flaw for this market?
I think in terms of priority, what I would rate, number one is the biggest risk is going to be that, non-delivery or delayed delivery, because expectations are very high from the government. So if government starts waffling and wobbling, nothing happens in the next few months, the budget turns out to be a damn squid, there's nothing really radical or nothing really positive for the budget for the longer term. I don't care what's in it for short term in terms of tinkering of small exemptions or swaps, etc., etc. If those things don't happen, if GST doesn't get implemented in the next few months or a year or so, I think that's a big risk to the market, which is basically execution and governance that has been plaguing, various sectors. The second, obviously, people are ignoring at this point of time completely, and we are taking India as an isolated, nation, an isolated country, that no one even is looking at what's happening globally. So the global risks have to be factored in. Of course, for the first time in the living history, we've seen negative rate of interest coming in from the European Union. A lot of things are happening abroad. I think we need to keep a watch there, because linked to that is a currency, flows, etc. So as soon as flows start to dry up or flows start to look shaky, that's another big risk. And flows, and the first aspect which I said, reform, governance, execution, they are linked together. So if execution gets into a fast-track mode, I think the flows will carry on, and vice versa. So a combination of two are the biggest risks to the market. Coming to your question on what is the floor, I think probably that 6,700, 6,600 would be the floor for the market if a correction does happen. Yes, it is very far-fetched from the current 7,700 levels, but I don't think the market's going to really go below that level in the near term unless something catastrophic happens globally or within India.
All right, Sanjay, we'll leave it at that. Thank you for giving us your views. That's much needed caution. He says that the Nifty may not head beyond that 8,000 level, and markets look fairly valued at this juncture.